Hey guys, George Masri here. I just finished recording an episode with Mark Loeffler, and if you guys have heard some of his stuff, my interview with him in the past, you know that he's a very knowledgeable guy, really understands money and investments. So we covered three topics today. The first one was options trading, and if you've ever watched anything that Mark does, he's a big supporter of options trading. So we kind of broke down a little bit of how that works, and we talked about creating $10,000 of income, or I guess of dividends, but through options trading. So how do you get to a point where you're able to replace your income and get to $10,000 a month? So that was one of the topics. It was cool to see his perspective on how he broke that down. Number two, we covered a little bit of Bitcoin, gold, and precious metals. And we discussed what he thinks, if it's worth getting into it for him and his opinion, and just kind of breaking down why you would want to have Bitcoin and that type of thing. And then finally, we talked a little bit about real estate. So he owns a lot of buildings. He sold 7 of his buildings earlier this year, and he started buying a little bit in Alberta. So we kind of covered why he did that. A lot of good stuff in here. Hope you'll enjoy. And if you guys are enjoying the episodes that I'm bringing, I encourage you and ask you to leave us a review on iTunes or on the Apple Podcasts platform. And make sure to share this with your friends and family. And then if you ever want to connect to discuss real estate, you want to talk about potentially working together on triplexes, fourplexes, fiveplexes, that type of thing, you can just go to welloff.ca and book a call. Thanks, and enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. For probably the third time, I'm here with Mark Loeffler. So for those that don't know, Mark is an investor. He's been investing since 2004. He started off with single families. He did a bit of rent-to-owns, duplexes, triplexes, and then got into larger buildings. He also does a bunch of options trading and investing, which we'll cover a little bit. And I wanted to talk about a couple things with Mark, but it's been a while since I've seen him, so I figured we can catch up a little bit. If you want to tell me just what you've been up to lately. It's been probably, like six months maybe since I've seen you?
Yeah, it's been a while. Yeah, COVID,
Yeah, so what's new? What's going on with you?
Well, I sold 7 apartment buildings in Hamilton.
Yeah.
I think... Were you around when I was doing that? That was January-ish. So,
I saw some of those.
So I sold those. They're all closing. They've either all closed or are closing this month. I bought 2 more out in Alberta. I bought a personal property out in Alberta, just in Canmore, that I'm going to Airbnb and use for personal use.
Mm-hmm.
I've continued to do options trading.
Cool.
That's about it, I guess.
What's the deal with the 7 buildings that you sold? I think you said at the time you had a partner that was looking to cash out. Was it all with the same partner?
All with the same partner, yeah.
Okay, cool. And then you took that money, reinvested a little bit, and I'm assuming you're using some of those funds to do some more options trading?
Yes.
Yeah.
Definitely using some of that funds to do more options trading.
Okay, cool.
Yeah.
How is the YouTube thing going for you?
Yeah, so that's YouTube. I got monetized back in November.
Mm-hmm.
I think it was November. And since then, it's grown up to about 4,600 subscribers.
Nice.
So it's going good. I cut back from 3 times a week to 2 times a week. People don't understand it, but it's a lot of work to put out content and do the research, and so
yeah.
I don't look like an idiot on there, which sometimes I do anyways, but it's a fair amount of work, and then just the post-production and getting it all ready to go out, it's a fair amount of work. So I cut it down to 2 times a week just for, to be honest, if it's not going to be fun for me, I'm not going to do it.
For sure. Yeah. So what are you doing then when it comes to the podcast? Your YouTube channel. Are you doing all the research, or do you have somebody that's kind of setting up your episodes? Are you doing the post-production, or?
So I do all the research. I actually was looking for a researcher, and I thought I had someone, and that kind of fell through. I don't know what happened, and then I kind of just wasn't motivated anymore, so I didn't pursue that. So I'm doing all the research. I'm coming up with the topics.
Mm-hmm.
For the most part, we have a little chat going amongst our team, and I'll just drop in there, hey, what do you guys think? Or a lot of times it's what comments am I getting? right? Like, am I getting the consistent comment over and over again? And it's like, okay, well, that's something a few people want to know about. So, and I like that topic, so I'll do that. And then obviously the post-production is all done by Ramona.
Okay. Yeah, you had somebody different, I think, before, and then Ramona's taking care of that. That's good.
Yep.
What's been your most popular topic to cover, or topics?
So, I mean, we do a monthly kind of market update, and that's been the most popular by far. Like the last, so I do it with Andrew Hines every month.
Yeah.
And like the last one's over 18,000 views,
Nice.
which for me is really good. Some people, obviously, that's like a good hour. But that for me, that's a good good video.
Yeah. Okay, that's cool. So what do you see as potential? Like, do you see YouTube becoming another income stream for you, or is it just kind of, you just make a little bit of money, maybe it covers some of the production costs?
Yeah, I mean, it doesn't break even yet.
Mm-hmm.
I mean, we've gotten deals from it. Like we've gotten people who've reached out to me and said, hey, you know, we like what you do. Can you help us find investment properties?
Yeah.
So that's been good. And just it's been a good way to stay in touch with my database instead of actually phoning them.
Yeah.
They all just come check out the YouTube
True.
channel now. So that's been good as well. So we've gotten deals probably from that without really like having to make that phone call. So that's been really good. But yeah, for the goal there, I mean, I'm just having fun with it.
Mm-hmm.
You know what? I mean, I think, what do I make? $600-700 a month. And again, it doesn't cover the production yet. And I'm sure at some point it will, but again, I'm not that worried about it.
That's not bad though, to think you started out with nothing on YouTube, like just over a year ago.
Just over a year ago, yeah.
And now you're at $600 or $700 a month. That's decent. It's nothing, like this. It's pretty good.
Yeah.
I know it costs a lot of money to produce it in terms of the revenue you're bringing in, but there's some good potential there. So,
well, I mean, here's the thing. Anybody could have, like, I could have learned how to do the production, post-production, and I could have done that. And I mean, you're going to spend a lot of time at it at the beginning, and then hopefully over time, it grows and grows and grows. And then at some point, it's, the return is exponential. Yeah. But your return up front is very small. It's like anything, right?
Sure.
Until you learn it, and people, and I'm sure, like, you watch my videos today. Well, obviously the production's better because somebody's doing it. Yeah. Number two is, I'm not filming it on my iPhone. We have proper mics now. We're a little bit more professional than we were a year ago.
Oh yeah. Yeah, it's thanks for taking a shot at me there. I'm recording this on my iPhone right now. But honestly,
and yet though, what I'm going to say is, you don't need to be that way.
Yeah.
If you have good information, people will watch you.
I'm going to be honest. My iPhone camera is just as good as any camera. Maybe not as good as like a $3,000 or $4,000 DSLR, but it's as good as like a GoPro or whatever else is out there, like the standard stuff. But anyway,
it's true.
Yeah. Okay. So I want to cover 3 topics. The first one is options trading, because I know that's a big part of what you do. Mm-hmm. Number 2, I want to cover Bitcoin and gold.
Okay.
And then 3, I want to talk about real estate.
Okay.
Okay. So here's a scenario for the first thing that I want to cover, the options trading. Let's say you have somebody starting out, no experience with it, has $10,000, and their goal is to generate $10,000 of revenue each month from their stocks, from their portfolio.
So you want to make 100% return per month?
I'm not saying like immediately. I'm saying over time, like to get dividend payments from your stock, whatever it is.
Yeah.
How do you do that, and what would that look like? How long do you think that would take?
Right. So I would tell you that you need to read Derek Foster.
Yeah.
Money for Nothing, Stocks for Free. We've had that conversation before. And then I would tell you to get Lee Lowell, Get Rich with Options, and read basically 2 of his strategies, which is naked puts and covered calls. And then I would just tell you, hey, you know what? If you can afford to lose that $10,000, then you should go ahead and, put that into a stock market account. I use Interactive Brokers because I find their fees want to be some of the lowest, and it's a good platform. It's easy for me. It's kind of like a video game. And then I would say just start trading, and the biggest mistake people do once they think they got it is they start chasing yield. and you don't need to. Like, I mean, what do you need to get? Like, to get to $10,000 a month, I mean, so let's back up first, but like, you could probably easily do $3,000 on your $10,000 in the first year, which is a 30% return.
Yeah, but you're talking about like the growth of your portfolio when you say that number, 30% growth in your portfolio, or are you talking about kind of dividend payments that you're getting, that type of thing, or is it just overall?
Overall,
yeah.
It's like it's called your net liquidation value.
Right. Okay.
Right? And then what I would say is once you have that set up, is you should be setting aside money monthly to grow that. So if you can afford to put $500 a month in, you set up an automatic payment. It's just a bill payment. It's like, you know, a car payment that goes in there every month. And if you're doing, I mean, so Cam in our office just started trading about a month ago.
Yep.
And like he's up, I think he's up like 8% or something, 6 to 8%. Cool. I don't remember exactly, but like, so he's
in a month.
I think it's about 6 weeks.
Nice.
And like, he's not trading anything stupid. He's really just, you know, so I gave him the strategy: buy things that you pay for that nobody else thinks, like that you pay for without ever thinking about. And then on riskier stocks, you buy back at 50% of when the option has decreased 50%. And on safer stuff, like for me, like Suncor, Enbridge, stuff like that, I wait till 80%.
Okay.
Like this yesterday, I bought back Tesla put at 50%. Today, I bought back Uber puts at 50%.
Can you just kind of break down what you mean by that? You buy it back just in a very simple manner?
Right. So basically, what I do is I sell naked puts. So I sell insurance for people on their stocks.
Yeah.
So for instance, Uber, I think it was trading around $48, and I sold a $45 put.
Okay.
So somebody paid me 70 cents per share, and I was obligated to buy that at $45.
Yeah.
So if it went below $45, they could then use that obligation to me either on or before the 16th of July.
Okay. There you go. So just to kind of recap that. So for the person who owns that stock, it's worth $48 today. If they think that it's going to drop to, say, $35, they're going to take your option, your naked put. They're going to pay kind of like a premium for that. And then if it does drop to $35, they can then ensure that they can sell it to you for $45 by July 17th.
July 16th.
16th. Yeah. Okay. So it's an insurance for the person that owns that stock.
Yes.
Yeah. Okay.
Yeah. And people will bet on it going up or down by buying calls or buying puts. I don't do a lot of that. I do buy some calls, but majority is I'm selling naked puts and covered calls. Okay.
Yeah. All right. So back to that scenario, how long do you think it would take somebody starting out with $10,000 to get to $10,000 of dividend or cash flow somehow from your portfolio?
So you're looking at $120,000 a year. If you just do 30%, so here's the thing: do you want to take out the $10,000 a month? Is it just want to growth $10,000 a month?
You want, I guess, dividends of $10,000 per month.
Well, dividends is different, right? Like if you want to put that all into Enbridge, you're looking at, it's a 6% return, or 6.5% right now.
Dividend, right?
Dividend. But if you had bought back in March of last year when it was a 10% dividend, right, you'd need $1.2 million. Right. Now you need, 1.9. Yeah. Right. Whereas if you're doing the naked puts and covered calls, so even if you just bought Enbridge today at let's just call it $50, right? And it's a 6.5% dividend. So you bought, you had $1 million. That's $65,000 a year, right? And you sold covered calls throughout the year on it, you could probably earn another 6 to 7% or more, maybe 8% on that. Yeah. On that money, right? So now you're 14.5%, and you're just over your goal. So maybe you need about 800,000. Yeah. Like that's super conservative. Like you don't get paid a lot for those covered calls. Sure. Like if you want to be, aggressively, you need probably about 320 to 360. I would probably tell you that, like, because you're going to have ups and downs. Yeah. You want to be trading 500-ish or more. My goal is always 2 to 3% a month.
Okay, yeah. So it sounds like it'll take a while. It's not something like you gotta get your portfolio, if you're, let's say, just buying Enbridge, to be worth about 1.9 million today.
If you just want straight dividend.
Yeah,
but if you did the dividend covered call strategy, it's less than half of that.
Okay. I'm not really sure I understand how, because I think what you're saying is that you're going to earn a return on, or you're going to buy the stock at a discount, so it's going to improve your... No. Okay.
I'm just saying, if I bought the stock today, Enbridge, let me pull it up.
Sure.
So Enbridge is at $49.20.
Okay.
It is a 6.6% dividend yield.
Yeah.
So I bought it at $49.20. I could basically go in. I just bought it today, and so for July 16th, I could go ahead and sell a $50 call against it.
Okay.
For 43 cents.
Okay.
So that makes me an extra 1% for the next 3 weeks.
Right.
Or, I could sell farther out. I could sell a $52 one for August, but I get paid 32 cents.
Okay.
Right. So, I mean, the thing with Enbridge is it's pretty sedate.
Yeah. It doesn't really, it's not a very volatile stock. It kind of, over the last 10 years or so, from what I remember seeing, it's been somewhere around the same price.
It's gone between $34 and $50.
Yeah. And it's varied throughout those 10 years. It just keeps going up and down between those numbers.
Yeah, pretty well.
Yeah. So that's an interesting one, because you're going to get consistency with it.
Well, that's the thing right there. So if you held it, you were in $55, $56, and then it dropped down to around $34 when we were playing it. Then it climbed back up. Then it fell back down.
Yeah. But you're still getting that 6 to 8% dividend on it anyway. So it's kind of like insurance on itself, because it's a high dividend stock.
Yeah. I forget when it was. I think it was earlier this year in December, January. So here's the thing: Enbridge makes more money in the wintertime because it's they heat people's houses.
Yeah.
So they're transferring more gas.
Yeah.
I told people to buy it then. I think it was a 7.8% dividend.
Yeah.
And a bunch of people reached out to me and said, "Hey, thanks for the heads up on Enbridge." And they bought it at $44. It's went up 10% since. They've got dividends of a couple percent too. So if they were using this covered call strategy, then they'd be doing pretty well.
If you buy it at a certain dividend, do you always get paid that dividend, or does it change as Enbridge changes their dividend payout?
The dividend's based on your cost basis. So here's the thing about Enbridge. They've also stated for the next couple of years, they're going to raise their dividend 10% a year. Right? So, if I got it at 10% dividend yield and they raise that 10%, then my yield is now 10.6 or something like that.
Okay. So you buy it at a 7% dividend, you get paid that amount for the lifetime of that stock.
Yeah. So you think of Warren Buffett, right? Warren Buffett owns a crap ton of Coke shares. He gets paid more in dividends per year than it costs him to buy his Coke share back in the 80s.
Wow. Yeah, that's pretty cool.
So he makes 100% return just on dividends through Coke every year.
Yeah. I didn't know that. That's an interesting fact. Now, here's the thing. Last year, around March or around that time, we saw a big dip in the market.
Well, between February and March 23rd was the lowest price.
Yeah. So what happened to your portfolio? Did you take a big hit? Because I know you were doing a lot of transactions at that time. So
end of February. So here's the thing. These things, you can see it coming.
Yeah.
Right? In January, I was heavy volatility. It took me a month it took me 2 months for that to really pay off. But I was heavy volatility. And so I almost hit the bottom, and I started buying again. But I wasn't in many stocks at that time. I was in a volatility product called the VIX. It's volatility index, which you can basically do the same thing I was doing on other stuff. But I was in that rather than stocks. So once everything went to the fan and everyone was like, "Oh, this COVID thing is real," my volatility, like it shot through the roof. So I made some good money.
Okay.
Yeah.
Wow. Always works out for you somehow.
Somehow.
Yeah.
But here's the thing, right? Like so with this strategy, if you just did naked puts and covered calls and you were holding a lot of naked puts. So the thing is, if you were deep into margin, yeah, you're going to get margin calls. You're going to get screwed. If you're not deep into margin or not using margin, then basically what happens is you're going to buy that stock and at a certain price, which ostensibly you might want to buy it for anyways, right? If you bought just a stock in February, it's the same thing. Okay, it goes down. And it's like, what's your strategy? Did you buy it just to sell or did you buy it for dividends? Like you could just hold on and wait. And, by June, July, August, September, you look like a genius.
Yeah.
And everything was up, 100% since the bottom, right? So,
yeah. Do you know of anyone who may have not done too well during last year's dip that was applying the strategy?
Oh, yeah.
Yeah.
Yeah. And there were people who were very margined.
Yeah. Yeah. And those people got hit the worst.
Well, because they can't sustain.
Yeah.
They couldn't hold through the dip, right? So you have to sell at the low point.
Yeah.
They get margin calls. So they got.
Is that when you're leveraging your stocks? So
yeah. So
okay.
When you're with IBKR and you're going to do options, you have to. So if you're going to do options, you have to have a margin account.
Okay.
And they give you 3.3%. So if you have $10,000 in there, you can trade 33,000, 36,000, something like that.
It's quite a bit.
Yeah.
Yeah.
Right. And and some people take that right to the limit. So if you're right to the limit, like you have, $10,000, you have 36,000, but you have $35,000 in obligations, and lo and behold, the market drops 20%, then you're gonna get liquidated, and you're gonna lose 20% off $35,000, not 20% off $10,000.
Yeah, yeah. Could they pursue your assets, if you don't have the funds to pay what you owe?
There's been conversations like that. I kind of doubt it.
Yeah.
That's why. So on some of the high volatility stocks, they actually don't let you use margin.
Okay. Yeah, that makes sense.
Or I think they actually tightened the margin requirements, which affected some people too who are using margin.
Yeah.
Right.
Yeah. Do you have to use margin? No, you don't have to.
You don't
okay,
have to use it.
Fair enough. Yeah, I'm really interested in learning a bit more about this, but it's been something that I've thought about for the last 2-3 years because of you mostly.
Yeah.
But I haven't done it because I don't know. I just I don't know. I feel like it'll take away my focus, but I know that there are a lot of benefits to doing this thing.
Yeah. Talk to Cam Sullivan,
or even Alex Powell. I think he was saying that he
Powell's
started doing it not too long ago. So
yeah.
All right, so that's a little bit about options trading. Let's talk about Bitcoin, gold, precious metals.
Okay.
Just in general, obviously there's been a dip last time I checked, there was a dip in Bitcoin. I don't really know what's happening now.
It's up 4% today.
Up 4% today? But from, let's say, a month ago.
Oh, yeah, it's down. It hit 60,000 something, and now it's 34,000.
Yeah, so what are your thoughts on that? What do you think's happening with it?
There's so much volatility around it because it's not a known quantity, right?
Yeah.
The people who believe in it fully, and they obviously bought the dip, and they bought it hard. And hey, it might turn out that Elon bought, $1 billion worth of Bitcoin at 27,000, and he's going to sell it at 40 again, right?
Mm-hmm.
He probably made $1 billion off Bitcoin already this year, right?
Yeah.
So yeah, here's the thing: it's just super volatile. I don't know I don't own any.
Okay.
I play it through some of the Bitcoin miners, and I do own Coinbase. I bought some Coinbase recently, just because I think there's something there, and I think Coinbase is obviously an exchange, and I like owning exchanges because if it goes up or down, people are buying and selling. Mm-hmm. And they're not. I don't think they hold any. I always tell people to comment down below, but this isn't YouTube, so
yeah. A few. I don't know if they're going to mind that I'm mentioning this or not, but I know the rockstar guys like Tom and Nick, they were covering Bitcoin quite a bit on their podcast over the last year, and I was just curious to know your opinion because obviously you're really knowledgeable when it comes to this stuff. They find well, they believe in gold too, and hedging against inflation through Bitcoin and gold and that. Do you believe in that type of thing? Like, do you invest in precious metals yourself?
I do not.
Yeah,
I do not.
Why not?
I just believe in taking free money at mortgages, and then then that gives you leverage against inflation. If I have a 1.4% interest rate on my mortgage, and inflation actually goes, it's 4%, 3.6% right now, 4 or 5. I don't know. If you listen to some people, they think it's 10, 15, 20% right now.
Yeah.
So I get interest rates at 1.4%. Right there, I'm making a heck of a good return.
Well, especially if what you're buying is making a substantial return.
Yeah.
Yeah. So you're, in your opinion, forget gold. And why is it that you don't really care for gold or for precious metals or Bitcoin?
I mean, it's pretty.
Yeah.
But I can't do anything with it. It doesn't provide me cash flow. I'd rather get cash flow.
Yeah.
I'd rather be in the options trading. I mean, here's the thing. Will I buy a gold miner? Sure.
Yeah.
Will I buy an oil producer? Sure. I don't need to own the physical metal or...
Yeah.
I mean, here's the thing. I have thought about buying not Bitcoin, but like Ethereum. Somebody actually was on my show. He's like, and Ethereum was $700 at the beginning of the year. He's like, this is going to go through the roof. And the more research I do on Ethereum, is I think that's the coin to buy. I haven't done anything with that information yet. So I'm just...
Yeah. Would you say that people that invest in like gold or precious metals or Bitcoin, it's more of a defensive strategy as opposed to buying real estate, which is defensive in some ways, but it's also a little bit more offensive?
That's a great question. I have no idea. I've never really thought about it. And the guys who buy gold are sometimes the conspiracy theorists in what I see, right? I'm not going to say they're anti-vaxxers or anything, but maybe, I don't know. No, you can scratch that. I don't know. But I just never... Yeah, I mean, there's so many other ways to hedge inflation that are more... That are just more beneficial to me, I guess.
Sure. Can you share some of those strategies aside from real estate and maybe options trading, I guess?
I mean, I don't think I need any more than that, right? That's
true.
Like I'm a pretty simple guy, right? Like I like to keep it simple. I mean, you look at, so any companies to hedge inflation, you look at stuff that can, increase either their prices without increasing as with their cost of production. So something like Apple's already proven that they're not price sensitive. If their cost of manufacture goes up, they can pass that along to the customer. Someone like Amazon, they don't actually make anything. So they can pass that along to the... Well, they actually make stuff. Like, I mean, I'm sure one of your tripods is AWS, right?
What is that? Isn't Amazon Basics their line too, or I don't know?
I don't know. But yeah, they make stuff, but at high profits or whatever, right? Yeah. But they can pass that along. Stuff like that, right? So like Enbridge, like they just pass things through.
Yeah.
So I don't like, or like if you think... I buy gold miners instead of physical gold.
So you're banking on the profitability of the gold miner as opposed to the gold itself.
Yeah.
So you believe that gold miners are going to make money because gold is in demand for whatever reason. So you're investing in that idea.
Yeah.
Yeah. Okay. Fair enough. Yeah. Is there anything we didn't cover here on Bitcoin and gold and precious metals?
No, because I don't know much about it.
Okay.
I mean, other than I've read some white papers on like Bitcoin and Ethereum and stuff like that, but like nothing big. I'm not...
It's all pretty new, but it seems like it's a lot of people are talking about it now. And it's easy to get caught up in these things and try to get rich off of these things. But anyway, I just wanted to pick your brain on it.
Yeah, fair enough.
Okay. Number 3, so we're going to cover some real estate.
All right.
I know you touched on it a little bit, but why did you start investing in Alberta?
So, I mean, I had the opportunity to buy my partner out here. I looked at the numbers and basically said, for what I have to buy them for, I don't want to own them. And, that was it. And then I'm still looking for real estate in Ontario. It's just I haven't found anything that makes sense for me right now.
Based on what, cap rate or?
Cap rate and opportunity. And then the secondary thing is, now this is good and bad with Alberta, is it's the Wild West. So like I can walk in and I can increase the rent.
Yeah.
Like once a year, basically whatever I want. The other thing is we sign a 1-year lease, George, and you turn out not to be such a great tenant. At the end of your year lease, I just say, George, we're not renewing. It's been very nice having you. Get out. Right?
Yeah.
I don't have to make pretext. I don't have to keep you on. Evictions there take 2 weeks. Somebody doesn't pay.
Yeah.
You're gone.
Yeah.
So, and it feels like a lot like Hamilton did 7 years ago.
Yeah.
Now, my one concern out there, and it's a big concern, is that when things start to boom, if they start to boom out there, people can start shovel in the ground in 2 to 3 months. So people can start building.
Yeah.
So that's a huge concern that, I don't think for me, it's not going to be long term. I mean, it's not going to be I don't plan on holding these assets for 10 to 20 years. It's going to be ride it into the boom, sell it with some meat left on it and walk away.
When you say shovels to the ground, are you talking about the time to develop over there shorter than it is here?
Yeah, definitely time. Yeah. Time to develop is way shorter. So there actually is a bunch of stuff came on the market, brand new, came on the market in the last 2 years. And that's why their vacancy rate in Edmonton's 8%.
Yeah.
So, I mean, we don't have the same, the issue in Ontario obviously is, we got rent control. So I can't walk into a building immediately and, get market rents.
Yeah.
If we could do that, I definitely would be looking in Ontario.
Yeah.
Because there's a lot of under market rent properties, right?
Okay, so you did mention that you are looking in Ontario. What markets are you looking still in Hamilton, or are you looking at other markets?
Hamilton, St. Catharines, Brantford, Niagara.
Yeah.
I don't really like KWC. I've never liked their numbers. I'd rather buy in Hamilton or St. Catharines, Brantford.
Yeah.
I'm looking for a 1 corridor. So typically anything but KWC, out east to Belleville, Kingston. I've looked in Peterborough a bit. I would go out the other side at 401. I mean, I'm looking everywhere basically in Ontario that's not too far north of the 401.
Okay, cool. So if anyone's listening and you've got some opportunities, share them with Mark.
100%, yes.
Yeah. I was going to say, we don't look for the same product. Obviously, you're looking at bigger scale projects usually, but I've been looking at 4 to 6 unit buildings. And what I've noticed personally is that there isn't that much of a price difference anymore between Welland, St. Catharines, and Hamilton.
I agree.
And it's actually, to me, it's making Hamilton more desirable now because it's very close in price.
I agree. So every time I find something okay in St. Catharines or Welland or something, it seems like this deal comes up in Hamilton and I throw St. Catharines and Welland away.
Yeah.
And I just concentrate on working in Hamilton.
Yeah. I don't know why that's happening, but it even from last year till now, the prices in the Niagara region have increased substantially. I'm not sure why there's such a huge demand for those areas, but
I don't know either.
Yeah.
I'd rather be in Hamilton all day long. The economic fundamentals of Hamilton is way better than a St. Catharines, Niagara, or Welland.
Yeah, I would say probably there are certain pockets in maybe Welland and St. Catharines that are nicer than downtown Hamilton. You have maybe a better tenant base there. That would be the only thing, but otherwise, I'm thinking Hamilton's looking good.
I mean, 6 out of my 8 buildings in Hamilton were downtown.
Yeah.
And we get great tenants.
Yeah, I agree.
We make nice units. And when I said Hamilton or Edmonton was a lot like Hamilton 7-8 years ago, nobody's really renovating the units like we renovate them now. Because I think you renovate like I do, right? You can make them condo, you put dishwashers, washer-dryer in, granite countertop type thing, right? Nobody's doing that out in Edmonton. They're newly renovated means they probably put down some laminate and painted.
Yeah. Yeah, for sure. What I was saying is like nicer areas. I mean, for somebody who's not maybe experienced in those markets, if they drive by downtown Hamilton and they see mattresses on the street and a bunch of people shirtless and stuff, you know what I mean? And then you go to like certain areas in Welland or St. Catharines, it might look a little bit nicer. The lawns are a little bit more groomed and that type of thing, right?
Yeah. I mean, there's those areas in St. Catharines
Oh,
too.
for sure.
Yeah.
Oh, yeah, definitely. Same with Welland.
Yeah.
Welland's pretty bad in some areas.
Yeah.
But so that's it for real estate. I think the last thing I was going to ask you about was your fitness. Like, are you doing some triathlons?
Yeah, man.
That type of thing?
I'm doing a full Ironman in September.
Cool.
I'm doing I think it's 24 hours now at Wilderness Traverse in August. I'm actually doing a half Ironman this weekend.
Whoa.
Yeah, I'm playing 4 or 5
crazy.
rounds of golf a week. So
Yeah, I want to play with you at some point. I just started golfing this year, so I'm pretty bad. But anyway, at some point we'll play.
Yeah.
But that's cool. How do you make the time to do all that stuff? You've got so much going on. Like, you're doing the 2 videos a week on YouTube. You've got your real estate sales.
yeah,
training.
I mean, still got the restaurants there. Everyone in Hamilton go to Caro or Victoria Steakhouse.
Yeah.
I don't know, man. Like, you make time for what you want to do, right?
Yeah.
Like, it's and you budget, right?
Mhm.
I don't know. I ignore a lot of emails. So if you want to get a hold of me, don't email me.
Yeah.
Instagram's better, or text is always the way. But yeah, I honestly, you just concentrate on the important things.
Yeah.
And then if it's not important, it kind of just goes away typically. So
Sure. How are the restaurants doing with everything? I know now things are starting to rebound a little bit, but did they go through a really difficult time
Oh yeah.
Yeah.
Like, I mean, having a steakhouse, like nobody's really
ordering for
nobody's
Uber
doing-
Eats?
Yeah, no, like it's not as big, right? Like
Yeah.
we have the pasta and pizza place, and they do well. They do okay with the takeout and pickup and stuff. But yeah, the steakhouse doesn't. So it's good. Like, we only have a 20-seat patio there, so it's always full. Like, I tried to get in last Wednesday and I couldn't. Like, they're like, "Oh yeah, Mark, come at 5 or 9," and I'm like, "That's okay.
Yeah.
I'll go to Caro. Like, I don't really mind, right?" So I like when we can eat inside. Like, and I don't know. We don't need to talk about COVID and Doug Ford.
Okay.
I don't know. We can if you want. It's your podcast, but.
I don't know. If you want to, we can touch on it. But I think the point that you're making was that they went through some difficult times.
They went through some difficult times. And here's the one thing is like the government talks out of both sides of their mouth. They're like, "Oh, once we get to this level of vaccination, we'll open." And, "Oh, by the way, we're there. But, oh, there's this now."
Yeah.
And I'm like, really? Like, is this going to be going on forever? Like, what? Like, so anyways, I don't know.
Okay.
It
Well,
makes
they
me
survived.
Sad. It makes me sad.
Yeah.
They survived, and they'll do well. I'm not that worried about it, but I'd like them just to be fully open.
Oh, yeah.
At the end of the day, that's all I'm saying.
Yeah. Are they both on Ottawa Street?
No, so one's at Ottawa and Main,
Yeah.
and then the other one, so Victoria is at Lock and King, and we opened a second Caro in November, like during COVID, and that's on James Street North, just south of Mulberry, north of Mulberry.
Nice. Yeah, so I think that's it for the things I want to talk about. Do you want to tell people how they can reach you and what services you provide?
Yeah, you know what? Check me out on YouTube, The Mark Loeffler Experience. Hit me up on Instagram, Living the Dream 40. We help people buy and sell real estate, same as you. So reach out to George for that anyways. I'm too busy. George will help you. I mean, I don't know. Like, yeah, hit me up on Insta or hit me up on YouTube and check out what we do.
Yeah, if you guys are looking for apartment buildings, Mark's a great person for that. Not a lot of people have the knowledge and skills that he has, so I'm sure he'd be open to working with you guys on that type of stuff.
Definitely.
Mark, thanks for coming all the way to Vaughan to record this.
My pleasure.
And we'll play a round of golf soon.
All right.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.